Welcome everybody. I'm going to stay away from this camera so it does not get blurry on you, okay? It's going to be a quick video. I just wanted to let you guys know that I did buy a stock today. It's 3:22 in the afternoon. The market will be closing in the next 30 minutes on Friday. So I decided to go ahead and get in before Monday morning open. And let me reveal which stock that I decided to go with. It was a tough decision. So the Honest Company this morning was at $2.43. So for those of you that watched me the other day, I told you to wait until the quarterly report. And I told you if it's going to be bad news, it's going to crash the stock. If it is going to be good news, it's going to go flying up. Now today, guys, it is rebounding. It is up 15% today. Now the reason why that it's up 15% was because it really had a hard sell-off just the other day in the in the aftermarket. The aftermarket literally went from $3.40 all the way down to $2.43. So you're talking about almost a whole dollar that it dipped. And then today it's rebounding and it's back up 35 cents. So I shared with you that the day traders would take advantage of that. There's a lot of money opportunities when you see these day traders come in and they pump it up and build their money up in it, and you can do really well, especially if you have a large position. So for example, if you would have bought, well, I don't know, whatever you buy, I'm not going to analyze it, but you would have done well if you have a bigger position at 35 cents. So for example, if you had 1,000 shares, you would have made $3,500 today if you had 1,000 shares of, $3,500. So that's how you make your money in this business, okay? Is you analyze and you see exactly how low these stocks go, and when they get crushed like that, you have to really pay attention to when strength starts coming in. And that's one of the things that I'm going to teach you guys with my swing trading. As a matter of fact, my swing trading tutorial course is available. It is officially available. You can get it at jimmymastery.com. And you can get that stock training under swing trade. It's very valuable. It teaches you exactly how I pick stocks, when to come in, when to sell, how to put a stop loss, all that good stuff. All right. So now let's move along. So I did look at the Honest Company. I do have a position with the Honest Company that I did take up. I did buy that stock today. So it is doing quite well right now. I am not going to sell it. I'll try to wait for this stock probably to hit around the $3.50 range, and I'll probably dump it just like their diapers. All right. So now I really did consider getting back on the Novo Nordisk. The only thing I don't really like with this particular company right now is they're going through like something with Pfizer right now. I do think that this is a good price. I do think that this stock can make you a lot of money in the near future. It is probably a really good stock to get, but I did not go with it. I was also going to go with OKTA, which is down $1.62 today. This stock is at $84.25 right now. And I'm staying away from the camera so it stays on a good quality image. So if I get too close, the sensor screws it all up. So I'm staying away from it for you guys. Now on our morning stock show that starts at 7:30 every morning, that camera will be far away from me, so you shouldn't experience any issues in quality. Okay, so the reason why I didn't go with Okta, Okta is, or Okta, is a really good name. I mean, a really good company. It has went down. 84.28 is a pretty big drop for that stock. Now it could possibly have the potential to get to 73. Now they do have a quarterly report coming up in December 2nd. Now that report could be a really good report. And if you end up getting in this stock right now and that report is good, wow, you're probably going to make about $15 per share. Now, the negative side is if that report is bad and you're in this stock, you could go from $84 to $73. So something to consider. It's vice versa depending on the result. Now, OKTA has, they're known for doing good reports. So if you look at the history of their reports, they usually hit target. And you want to know why they usually hit target? Because they are a residual income kind of company. They have tons of accounts that pay them monthly premiums and yearly premiums. So they have residual money coming in. That's why it's a very safe overall type of stock. It's not, bulletproof, as you can see. It's had a tough week. But most stocks have had a tough week. All right, so I did not go with that one. OneStream is doing good. It was one of the few stocks today in the market that really did well. It's up 20% today. Now, the reason why is because of a good quarterly report. So see what can happen on a quarterly report. Quantum computing is at $12.59. This is a very high risk, high reward type of stock. We've talked about this in the past. That's a price that I haven't seen it at recently. The only thing that I'm going to alert you on, I don't recommend you get it right now simply for the fact that it has a quarterly report coming up. So I would probably stay out and see what happens. If that report is bad, which it typically is for this company because they never make any money yet, it could really tank it down to $10. So I would wait. Okay, we got a new stock here that we added, our Revolve Group. It's at $21.29, so we're going to start watching this stock. We also added Robinhood, which has really done well over the last 6 months. It's out of my price range right now, so I have no interest in it. It's at the 5-year highs. But we'll keep an eye on it. Serve Robotics. This went all the way up to almost $13 a share from $9. It's at $10.58. I'm not like a huge fan of this, but hey, sometimes these type of stocks go and double your money. So the reason why I'm not a big fan, it's more of a hype right now. I don't really see what they're building as being that, dominant on big money. But hey, I could be wrong. SoundHound was the one that I really struggled with today. This was one that I was so close to pulling the trigger. I could have got it at $13 and some change because I could have added to it. So anytime that this dips, I like to buy more and more and more because I do see this as a $30 stock eventually. But I did not add to it. I did not get Strive. It's up today, so I didn't want to mess with that one. Super Micro, they really struggle. I talked to you guys about this. Their quarterly reports stink. They're not making any money. Their stock keeps dipping, and yet for some reason this stock consistently goes right back up to the $50 range. It's just because it's being pulled because it's a data center. That's the only reason why. Because the AI is in demand and they have a relationship with some of these chip manufacturers like NVIDIA. So that's the only reason why. Symbotic came down a little bit today. Now, I tell you what is a good sign with Symbotic, guys. If you do own Symbotic, I wouldn't worry about this stock. It just has a lot of investors in it. This stock got down where it was down $4 or $5 today, and it just completely rebounded right back. Every time the stock goes down, it gets right back up. All right, so here is the stock that I purchased today. We ended up buying, not a huge position or anything, but we bought 1,000 shares of Trade Desk. This is the one that we went with. We paid $43.53. Hey, we're up 10 cents per share. Not bad. All right, so I ended up going with the Trade Desk, guys. Now, here's the reason why I chose the Trade Desk today. The reason why I chose this was that it had a quarterly report yesterday, and the report was actually strong. It did spend more money than people wanted to see them spend, But guys, this is a company that has a ton of cash in the bank. They have a ton of money. So that is a really strong sign. They're not going to go bankrupt or anything like that anytime soon. They've got plenty of money. They've got money to usually bail themselves out and make investments and things like that. Who knows? Maybe they can sell one day. Maybe Amazon would buy them. Maybe, I really don't know. But the bottom line is that I got a 5% discount on a beaten up stock. So I got an additional 5%. This stock, if we look at this stock, guys, we had, so let's take a quick peek. So you had this big fallout from $81, and this was in February of this year, okay? So then you had a big fall that brought it down I'm sorry, I apologize. So you had it at $122 in February. And then it had a bad quarterly report, and this is where everything started going downhill right there. It had a bad quarterly report, and it dropped all the way from $130 to $81. And that was in the same month of February of this year. So then it continued to fall, and it went all the way to 53, went back up to 62, came all the way down to $46. Then it worked its way all the way back up, started showing strength again in May at the $79 range. It stayed pretty steady, and it continued to go up from there back to the $87 range in August. Okay, so you're only talking 3 months ago, it was at $87. 90 days ago, it was at $87. And what happened? Bad report again, boom, and came all the way down. And that was devastating for the company. Went all the way back after it worked its way back up and got destroyed at $54. It has consistently traded across, dropped all the way back down, came back up to the 54, 53 range, and it has consistently worked its way back down. So, now at 43, 48, you're talking, guys, that is pretty much like, you're talking a 5-year low. That is a 5-year low, okay? So, I'm not saying that, the stock chart and everything looks good, and they haven't been doing good at all. You're talking about a stock that's lost $89 a share, 67. But also, I want to remind you that sometimes stocks can get absolutely destroyed from a quarterly report. And here's a good example of what exactly I mean. Look at Fiserv, okay? Let's take a quick look at Fiserv just in the last month. This is what can happen, and this is why you see these huge dollar amounts that these companies can lose on the stock. Look at this, guys. $126. You're on top of the world. It's October 28th. So you're talking 15 days. In 15 days, it goes from 126 all the way down to $61.63. And it has only went back up $2. Okay? So you're getting prices sometimes if you look at the 5-year chart and look where you are. So these type of companies, now I don't expect this company to just immediately bounce back. They have a lot of work to do to get, going. But these are the type of stocks that have big names, and, you have to just look at their financials. These are the type of stocks that you could get, a lot of times a $5 to $10 dollar per share. And if you hold, sometimes they can go up even more. Okay, so I decided on the trade desk. I went with them simply because the quarterly reports have absolutely hurt them, but they just filed the quarterly report. I don't have to worry about a quarterly report for 3 months or 4 months. What is it, 3 months? 4 months. So I don't have to worry about a quarterly report for a while. Getting again at the 5-year low. And guess what? The report was not bad. It was not that bad. I don't see the justification to lose $2.63 today. I just don't see the justification. It is actually down 5.84%. It's actually lower than what I paid right now. So it's fluctuating quickly. But you know, like I said, I think I'm going to hold it. I'm happy to be into this stock. And if it dips, you know, and I still think that things are pretty decent with it, you know, I'll buy more. But I wouldn't be surprised if I end up doing pretty good on this stock. We'll have to wait and see. Okay, time will tell. All right, that's going to be it for today, guys. Enjoy your weekend. I'll try to have my morning show start on Monday at 7:30 a.m. We'll have to go ahead and see if I can get everything set up by then. But if you're up in the morning, look to see if I've uploaded my video for my morning stock show. Okay, guys, and don't forget to go to jimmymastery.com for that course on swing trading. Thank you, guys, and make it a wonderful weekend.